I think that is in our near future. We would do it on the Ethereum rails, but not Solana. But I think what's really interesting is that there is a giant generational wealth transfer happening from boomers to Gen X and their heirs. Many of these younger investors, and I call them investors, don't have brokerage accounts.
Yeah.
Chris, they literally have wallets and it's all crypto. As they start saving for whatever goals matter for them, they will want to own traditional assets, but they're going to want to own it in token form in their wallets. And so I think this is going to be bridging, and I'm looking forward to a world. I'm a really optimistic person where there's no such thing as TradFi and DeFi.
Yeah.
It's just finance.
That's right.
And that will take a while. It's been part of my mission at BlackRock. It's certainly part of my mission at SharpLink.
As traditional markets wobble and digital assets mature, Ethereum is quietly transforming from a speculative trade into the financial backbone of the future. Ethereum's rise from a speculative trade to a cornerstone of digital finance is no accident. It demands strategy, patience, and discipline. Building sustainable value in this ecosystem requires more than hype, and Joseph Chalom, a financial strategist and Ethereum advocate perspective, highlights the fundamentals driving long-term success. At the heart of his approach is people. He stresses that assembling a world-class team of fewer than 20 highly skilled individuals aligned in vision and execution is essential to scaling responsibly. Capital strategy comes next, raising funds in ways that minimize shareholder dilution while steadily increasing ETH per share is key. Sometimes that means pressing the gas, other times stepping back. But the goal remains the same: accumulate ETH early at the lowest cost, even for funds with modest allocations. Equally vital is putting ETH to work. With billions in holdings, firms can lend, provide liquidity, and support protocols, strengthening the broader Ethereum ecosystem. Chalom envisions a flywheel where staking yields are reinforced by ETH-denominated revenue streams from operating businesses. Looking ahead, a generational wealth transfer is reshaping finance. Younger investors bypass brokerage accounts for crypto wallets, demanding tokenized access to traditional assets. In that world, TradFi and DeFi converge, ushering in finance without borders. This is just the opening chapter of crypto's evolution. The most transformative shifts are still ahead. Stay tuned, subscribe, and turn on notifications to follow every pivotal move in Bitcoin, Ethereum, and global finance.
Sure. I think the first thing is just to build a world-class team. And you don't build a world-class team in 2 days. You continually hire for the most important needs. And you build a team of like less than 20 people who pound for pound are just excellent at what they do, and they're kind and they're rowing together. The second thing is to just continue to raise capital in a way that's not really dilutive for shareholders.
Yeah.
There are times where you want to be more aggressive in raising capital. There are times you take your foot off the gas. But the whole purpose here is to, in the long run, drive higher concentration of ETH per share. That's outstanding. 2, accumulate ETH in large amounts, because if you believe in an Ethereum opportunity, and I want to get there, you want to accumulate as much ETH now as you can. And even those who say they're only going to own 5% of ETH in their fund, you still want to accumulate it quickly at the lowest cost.
Yep.
The last thing is, building connections to the ecosystem. It would be like really silly to say you're an Ethereum company or you're just an Ethereum treasury and not take that Ethereum and create opportunities in the ecosystem. And when you hold billions of dollars of ETH, you can actually help protocols be successful. You can, lend and provide liquidity. And so doing it in a way that's productive for the ecosystem is important. And then finally, when we look back, I hope we've built a business or two that is helping support some transaction lifecycle in the Ethereum ecosystem that spits off ETH-denominated revenue, because it's that righteous flywheel we're trying to have. And, when I look back in a year and a half, whether I have X billion or Y billion of ETH, that's not going to be the definition of success. It's going to be the whole thing I just described. Yeah, I keep on talking about the Ethereum opportunity, and if you give me 1 minute, the idea that the current rails that support traditional finance, where there's frictions in money movement, there are delays in when you can trade, even the best of trades will settle in a day. And that introduces massive risk to the ecosystem. Settlement risk. Will your trade actually settle? Counterparty risk. Will your counterparty be there the next day to make whole on that trade or on that swap? There is financing risk. There's collateral management risk. And I think very strongly that It all starts with stablecoins. We're at 275 billion of stablecoins, mostly running on Ethereum. But tokenized assets are the dark horse here, because I think that Secretary Bessent said that stablecoins will go from current levels to potentially 2 or 3 trillion in the next few years. I think there's an opportunity for tokenized assets, funds, stocks, bonds, real estate, private equity, to actually be measured in the trillions when we look forward in a few years from now. And that'll be running on a decentralized platform like Ethereum. So if you believe that's coming, and you believe, like we do, that there's a correlation between the amount of assets being secured on a chain and its native token, Ether, now is the time to start accumulating. And I think we just provide an excellent, smarter wrapper to get that long-term exposure. And I think it's less about, do you buy a treasury company? It's more important to understand why there's a long-term thesis and a macro trend, because it's almost like betting on the early days of the internet. It's a network scale adoption story, and many, many people like the yield. Most like the idea that they're betting on the future. I think that is in our near future. We would do it on the Ethereum rails, but not Solana. But I think what's really interesting is that there is a giant generational wealth transfer happening from boomers to Gen X and their heirs. Many of these younger investors, and I call them investors, don't have brokerage accounts.
Yeah.
Chris, they literally have wallets and it's all crypto. As they start saving for whatever goals matter for them, they will want to own traditional assets, but they're going to want to own it in token form in their wallets. And so I think this is going to be bridging. And I'm looking forward to a world. I'm a really optimistic person where there's no such thing as TradFi and DeFi.
Yeah.
It's just finance.
That's right.
And that will take a while. It's been part of my mission at BlackRock. It's certainly part of my mission at SharpLink.
As Ethereum matures into the backbone of digital finance, companies that combine institutional discipline with strategic partnerships are setting themselves apart. Joseph Chalom notes that his company is working to stand apart in 3 defining ways. The first is by being the most institutional and trusted player in the Ethereum space, anchored by a small but world-class team of experts committed to doing things right. This emphasis on discipline and credibility ensures the foundation is strong enough to scale responsibly. The second differentiator is the firm's deep partnership with Convergence, the leading force in Ethereum's ecosystem. Beyond the fact that Joe Lubin, Ethereum's co-founder, leads the company, Convergence brings unmatched expertise in applications, protocols, and core ecosystem infrastructure. This collaboration provides a strategic edge, giving access to rigorous due diligence, insights into smart contract risks, and visibility into yield-bearing opportunities across products and chains such as Linea. The third factor is recognizing that treasuries should go beyond passive accumulation. While his firm maintains a legacy operating business in affiliate marketing tied to gaming, the relationship with Convergence creates pathways to launch Ethereum-focused businesses that generate ETH-denominated revenue. When combined with staking yield, this creates a powerful flywheel for growth. As Chalom emphasizes, the collaboration extends beyond technology integration. Together, they aim to enhance the entire Web3 experience, delivering safer, faster, and more cost-efficient solutions for users while advancing innovation across the Linea ecosystem. Let's get back to the interview.
Yeah, even just going back to my BlackRock days, it's really interesting. I think people in this industry, the more successful your products are, the more humble you need to be.
Yeah.
Did you hear what I just said? The more successful your products, the more humble.
Yeah.
Because it's usually not a handful of people. The team at BlackRock was just a tip of a spear, and that spear was a giant trusted fiduciary with an amazing brand and amazing distribution. So I'm quite proud of what the team did, but it took a village. And the beautiful thing about digital asset treasuries are they are an incredibly scalable business. What do I mean by that? You need a staff that can handle the fact that you need to be a compliant public company. You have to have the right accountants and compliance rules and the like. But you probably need a very small team raising capital because you have relationships through bankers who help you. You have a very small team who's actually going out and buying and staking the ETH. And to be honest with you, it doesn't matter if you have $3.5 billion of ETH like we do or $35 billion of ETH. If you're building an efficient portfolio, if you're building something that's good enough for $1 billion, it should be able to satisfy larger scale. Where things get tricky is when these DATs get really, really large. You need to be careful not to disrupt or create questions about the protocol and its sanctity and safety. And you also need to be careful that if you have that much ETH, how do you make sure that whatever you're staking in can support your liquidity for a bad day?
Yeah.
And you talked about being prudent. I have a first principle. Treasurers aren't meant to lose money. I think we're trying to differentiate ourselves in three simple ways. One is to be the most institutional and trusted, and to have the strongest team, a small team, but team of experts who will make sure we do it the right way. Second is you can't overemphasize our relationship with Consensus, not just because Joe Lubin is a co-founder of Ethereum. It's because Consensus is the most expert company in the Ethereum ecosystem. They are, in some ways, the Ethereum company in terms of applications and protocols and core support for the entire ecosystem. Having that expertise in a strategic partnership is completely differentiating. Like, as we seek out yield opportunities, whether it's through consensus-based products or chains that they support, including Linea.
Yeah.
Imagine having a team of people who've already done the due diligence on every protocol. Imagine that, a team of people who are experts in smart contract risk. Imagine a team of people who know where the yield-bearing opportunities are. That is a huge differentiating advantage. And I think the third thing is we all forget that treasury companies, while their primary strategy is to accumulate their treasury asset and make it productive and hopefully over time create multiples of value, they often have operating companies. And that's to make sure you're running clear of all the SEC and NASDAQ rules. We have a legacy operating company in affiliate marketing related to the gaming industry. But you can imagine a world where a company like ours, who's so close to Consensus, would find ways, and I'm not going to tip our hat or share anything confidential, will find ways to build Ethereum-oriented businesses that would make sure that you're promoting ecosystem adoption. And if you can make money in a business, an operating business that has ETH-denominated revenue, what a flywheel.
Yep.
Like, we're going to have so much staking yield, as will all the DATs, that if you can compound that and then add in revenue that's ETH-denominated, it's just another way of continuing to grow the treasury. So I think that is in the future. I'm not sure that every ETH treasury has that plan, but our relationship to Consensus makes it not only a good decision, but a very natural decision.
Ethereum is steadily moving beyond its early reputation as a speculative asset and positioning itself as the backbone of digital finance. With institutional players embracing disciplined strategies, partnerships driving ecosystem growth, and ETH-denominated revenue models gaining traction, the network's evolution is clear. At the same time, the Ethereum Foundation is sharpening its focus by channeling resources into projects that strengthen the mainnet itself. In Q1 2025, $32.6 million in grants were directed toward advancements in zero-knowledge cryptography, gas efficiency, and consensus layer upgrades. Together, these efforts highlight a maturing ecosystem where sustainability, innovation, and real-world utility are reshaping Ethereum's financial future. Is Ethereum quietly transforming from a speculative asset into the financial backbone of the global economy? Crypto is rewriting the rules of global finance, but only disciplined investors who focus on fundamentals will thrive. Stay tuned and don't forget to like, share, and subscribe for more sharp insights into the future of digital assets.